Okay, it's 12 on the clock and we will begin. Good afternoon, everyone. Thank you for joining us for today's webinar on audit report requirements for care and maintenance funds. My name is Hamza Majid. I am the Manager of Financial Compliance at the Bereavement Authority of Ontario, and I am pleased to be joined by Bijan Tafigi, partner at MNP. Before we begin, just a few quick housekeeping notes to help our session run smoothly. Today's webinar will run for approximately 60 minutes. Please type your questions in the Q&A or chat box, although we recommend saving questions towards the end of the session, as most of them will hopefully be responded by our presentation today. We'll address questions towards the end of the session, provided there is time. If your question goes unanswered, please email to us on trust@thebao.ca or info@thebao.ca. We'll be happy to follow up one-on-one after the session. This session is being recorded. The slides and recording will be made available following the webinar. To minimize background noise, all participants are muted by default. If you experience any technical difficulties, please use the chat function to message our support team. At the end of the webinar, please let us know if this information session has helped you navigate your compliance questions. Your input helps us improve future sessions and tailor our support to your needs. I am glad to not only address our licensees today, but even those that support our sector, such as accountants and auditors who took the time to join us today. For the benefit of those outside the sector, the Bereavement Authority of Ontario is a government-delegated administrative authority operating under the Funeral, Burial and Cremation Services Act of 2002. Our mission is consumer protection, ensuring grieving families are protected, informed, and treated with fairness. We regulate and support a broad range of licensees, such as funeral homes and tree planners, cemeteries and crematoriums, transfer services, and sales representatives across Ontario. We are entirely funded by licensee fees, not tax dollars, and our aim is to maintain a safe, transparent, and accountable bereavement sector. As the government's delegated regulator for cemeteries and other death care operators and professionals, this webinar is part of the Bereavement Authority of Ontario's commitment to its strategic priorities to advance an evidence-based regulatory approach. Today's session forms part of our continued effort to support our valued cemetery operators, helping you better understand and meet your compliance obligations. Before we begin, I'd like to take a moment to provide some historical context for today's discussion. The regulatory framework governing cemeteries and funeral trust in Ontario has evolved considerably over time. Under the former Cemeteries Act and its regulations, the focus was largely on financial oversight. Cemetery operators were required to submit an audited financial statement for their care and maintenance fund if its balance exceeded $500,000, which is 500,000, with audits conducted by independent public accountants. This approach primarily verified financial accuracy and reporting discipline. With the introduction of the Funeral, Burial, Cremation Services Act 2002 and its accompanying regulations in 2012, the requirements became far more comprehensive. Audits must now not only ensure financial accuracy, but also include a written statement from the auditor confirming whether trust monies have been held and managed in accordance with the Act and its regulations. This change represents a shift towards broader focus on compliance, legal accountability, and ethical stewardship of trust funds. We understand that recent updates and clarifications, particularly around audit report requirements, have raised important questions across the sector. While the obligations to file audit reports for care and maintenance funds is not new, the BAO has placed renewed emphasis on compliance since March 2024, when we issued the first of several notices to cemetery operators. Our objective is not penalization, but rather to guide and support licensees in meeting their legal obligations. We also recognize that these requirements can be complex, particularly for smaller operators, which is why today's session is focused on offering practical, hands-on guidance to help you navigate them with confidence. Our aim today is to provide practical guidance, clarify expectations, and ensure you have the resources needed to comply confidently and effectively. Your professionalism and dedication are vital, not only for compliance, but for maintaining public trust and protecting grieving families across Ontario. Let's begin by reviewing the agenda and diving into the details that matter most to you. Today's session applies primarily to operators who have accumulated 500,000 or more in their care and maintenance fund and or have a funeral establishment operating on their cemetery. If either of those apply to your operations, you are required to submit an audit report on your care and maintenance fund within 6 months of your fiscal year end. For auditors and accountants on this session, please note that the prescribed timelines to submit the audit report is 6 months, meaning that if the fiscal year end of the cemetery operator is 31st of December, the report should be submitted to the BAO no later than 30th of June the following year. The intent here is to ensure transparency and accountability in how perpetual care funds are managed and reported to the regulator. To support you, the BAO has organized this webinar in partnership with MNP, a Canadian accounting firm with deep experience in the sector. My co-host Bijan will explain in detail the different type of audit reports, including what's required for care and maintenance funds, the difference between compliance reports and financial statement audits, and the different levels of assurance, which are reasonable versus limited assurance. This partnership allows us to ensure information you receive today is both regulatory and technically sound. This being said, I would now like to hand over the mic to Bijan, who will be going through the technical aspects of the audit report.
Perfect. Thank you so much, Hamza. So I will share my screen, and I'm very excited to be here today to present this topic and hopefully help demystify some of these topics, and happy to answer questions once I'm finished. So in terms of what I'll be going through today, just reviewing what the reporting requirements are, the compliance reporting. I also thought it would be helpful to provide some sample procedures of what your auditor may do. These are just examples. Your auditor may choose to do different types of procedures, but I'm hoping that that will help clarify the difference between a financial reporting audit and a compliance audit, which is required in this case. So just to kind of reiterate the reporting requirements, if you have a care and maintenance with over $500,000 or a on-site funeral home, you are required to have an audit for your care and maintenance fund. Also for your prepaid trust, if the amount is held in a pool trust fund, this would actually be a review requirement, not an audit requirement, and I will speak to the difference between an audit and a review as well. Okay, so kind of going back to the audit requirements, so an audit report must be filed, and what I would like to clarify here is if you read the wording of the Act, the wording is not asking for a financial statement audit. It is asking for an audit report that really confirms that you as the operator are in compliance with the Act itself. So this is not asking for a financial statement audit. It is actually asking for a compliance report. So in the audit world, we actually have a whole set of standards that is different from a financial statement audit to deal with these types of requests. There are two types of reports that are used in practice, and speaking with the BAO, either report would be acceptable. And this is a 3530 report and a 3531 report. And so a lot of this presentation, I'm going to discuss what these reports are and the differences between these reports. But if there's one key takeaway from today is that these are not financial statement audits, these are compliance audits. So they're actually very different from a scoping and an auditor perspective. For the audit, we also use the term reasonable assurance. So audit and reasonable assurance, these are two terms that often will be used interchangeably. On the prepaid trust side, the requirement is it's a review, not an audit in this case. So a lot of my presentation, I'm going to cover more the care and maintenance audit piece, but there's a requirement for your prepaid trusts to have a review, or it could be a review or an audit. Of course, I would imagine many will choose the review option, given that that's allowed. In terms of, and this is coming directly from the Act, what is required is you need to have this audit report requirement needs to be prepared by someone with a public accounting license. Effectively, they need a CPA to prepare this report or this independent report. They need to be independent from the operator. So of course, they need to be at a firm separate from the operator, usually an accounting firm. On that report, they need to include their name, address, their own license number with their public accounting number. They need to then also address that they have looked into the specific, they need to specifically write down, it's usually through an audit opinion, that they have reviewed this and that the information that they have seen is in compliant with the Act. And again, it's all about compliance. It's not about the financial statements, which is a very big difference. So Hamza mentioned that the reporting requirement, it's based on a fiscal year. The audit report is due 6 months after your fiscal year end. From my understanding, most fiscal year ends for the cemeteries are December year end. So if you have a December year end, then that would be a June 30th requirement. This is very important. And when your auditor is preparing the report, the Act is very long. So they could actually just reference these very specific clauses. And that would be something very important for your auditors to note, because if they feel that they need to say that you are in compliance with the entire Act, that would be a lot of work. It's specific to these sections that relate to the care and maintenance fund. So very important here. And those are, 10 or 12 sections there. And again, we chatted about, if it's under 500,000, then there's no audit report required. But my understanding is most of the cemeteries are over that threshold. Okay, and I actually think this, if there was any slide that is the most important, I think it's this one. It's really where we're trying to highlight here, what is the difference between a compliance audit and a financial statement audit? And so I would think most of us in the room are used to financial statement audits on the right-hand side. And a financial statement audit, really your auditor is there to provide an opinion that the financial statements are fairly presented and that they're reported under an appropriate accounting framework, versus the compliance report. It's really there to confirm or determine that you are adhering to specific rules and regulations, which in this case is the Act itself. So a compliance report is more on adherence on rules and regulation. Financial statement audits are on financial statements. In both cases, you are providing an independent opinion, but it's just, what are you providing the opinion on? Is it a set of regulations or financial statement matters? And again, we're talking about complying with the Act here. So in this case, your auditor would need to review the Act itself and review those clauses to make sure that you are compliant, versus if you think about a typical financial statement audit, they would look at IFRS accounting standards or private company accounting standards, or perhaps not-for-profit accounting standards. Again, that's specific for financial statement audits, but that's not relevant for what we're speaking about today, which is a compliance audit. The focus area for a compliance report is on regulation. And obviously your auditor needs to understand the specific industry rules. They need to understand the Act to make sure that they can actually opine that you are in compliance, versus again, on the right-hand side, it's all about the financial statement numbers, completeness of those numbers, etc. Both of these reports are done by CPAs. So CPA firms, for the most part, they're very used to doing financial statement audits, but they do also provide these compliance reports as well. Some firms may do them, some may not, but at the end of the day, they're both done by CPA firms. So the same individuals who do your financial statement audit could potentially do this report as well. The outcome at the end of the day is for the compliance report is you're going to get an opinion at the end, which says, hey, in the auditor's opinion, have you complied with the rules and regulations? Versus on a typical financial statement audit, it's about, are you compliant with the accounting standard itself? When I think of a compliance report, I would think of the users as being the BAO and other regulatory bodies versus a financial statement audit. That could be, if you're a larger company, could be investors, could be the municipality, it could be management, etc. But this is very specific for regulators, this type of audit report. As I mentioned earlier in the presentation, there are two types of reports that you can provide. One is called a 3530 report, and the other is called a 3531 report. I'm going to go through the differences between the two. I will say it's a little bit of semantics, to be honest, between these two reports. They are very, very similar in nature. It's just, yeah, there's some certain audit, I will say semantics, but they are very, very similar from a practicality perspective. So we have what's called an attestation report and a direct report. The difference between these two reports, it's really what I would say is the starting point. So for an attestation engagement, the starting point is that you as the operator would be telling the auditors, we believe that we are compliant, and you are confirming that fact. So that would be an attestation report where it's really the cemetery operator who is the responsible party. That being said, the audit will still opine to confirm that if that is true. Versus on the right-hand side, we call it a direct engagement. In that case, technically speaking, the operator is not saying, are they compliant or not? They are just saying, hey, here's our information, and it is up to the auditor almost to make that decision. So a lot of the work is almost identical between these two engagements. It's really the starting point. The left-hand side, you as the operator are telling your auditor, I am in compliance. Please review my work. Versus the right-hand side, you as a cemetery auditor aren't necessarily giving that statement from the beginning. So again, from my understanding, both will be accepted by the BAO, but that is something that with your auditor, you would need to determine as the very first step. Are you doing a 3530 report or 3531 report? The work is very similar, but starting point is a little bit different. So in terms of, again, I just want to chat on compliance report versus financial statement audit again. And what I would say, and every firm is a little bit different, but if I were to just look at compliance audits versus financial statements audits, if I were to look at how much you pay for a financial statement audit, in general, I would think that a compliance audit is a little bit cheaper than a financial statement audit in a sense that the financial statement audit is on the entire financial statements, all of the balances, including your trust amounts, your revenue, your expenses, your inventory, etc., versus a compliance audit is very narrow in scope, which in this case would be your care and maintenance trust. And it's all about compliance. So the work is fairly different, but if you in the past have been doing financial statement audits to meet this requirement, and you don't actually need to do a financial statement audit. From my understanding, you only from a regulatory perspective need to do the compliance audit. You may do a financial statement audit for other reasons, but from a pure regulatory perspective, it's the compliance report that is required. I mentioned that there are two types of reports, the 3530 and 3531. And I think different auditors may have a different opinion on this. If you were to ask my opinion, I would actually prefer as an auditor to do the 3530 report because I'd like it that management is confirming that they are in compliance as a starting point instead of me going in a little bit blind. So although the work is a little bit, what I will say, very similar for these two engagements, If someone were to ask me to do a 3531 report, which is a direct engagement instead of an attestation engagement, I would probably charge a little bit more because I'm taking a little bit more risk in that case. But again, every auditor is different, so I can't speak for everyone. But again, the big difference between these two reports is on the attestation reports. You as a cemetery operator are confirming that you are in compliance versus the 3531 report. Technically, you're not. So the starting point's a bit different. Like I said, the accounting firm, the fee is really dependent on the firm and what you negotiate. So I can't speak to what that number would be. I can't speak for all the firms out there. It depends on your size. It depends on many factors. So of course, it'll be dependent on those factors. I would think in the first year it will be a little bit more work involved, given it will sort of be new for your auditor coming into it to understand, your processes around the care and maintenance trust. How do you make sure that you're compliant? So generally, the first year will take a bit more work than the future years. Once you have that set up and you have that cadence and you've done this a few times, of course, it becomes a little bit easier over time. But I think the first time, as everything in life, is always a little bit more challenging, and that could be reflected in your fee in that first year as well. But again, it depends on the firm that you're working with. I want to chat on the concept of reasonable assurance versus limited assurance. For many of you, you may have heard the terms audit versus review. They're a bit synonymous. So in these reports, we don't say the word audit and review, we say reasonable assurance and limited assurance. But for all intents and purposes, a reasonable assurance is equivalent to audit level. Limited assurance is equivalent to the review level. So when you look at an audit opinion, it's a positive statement. It will say, in our opinion, this, for example, that we believe that they are in compliance, versus the limited assurance. It's more of a statement saying, hey, nothing has come to our attention. So the wording there is very different. And I would say reasonable assurance is quite a bit more work than limited assurance. So when we look at reasonable assurance, your auditor would actually go through source documents. They would, review the contracts. They would review the trust statements in a bit more details. They may do calculations. They actually have a requirement to understand your internal control environment in a reasonable assurance audit context. Versus limited assurance tends to be more discussions, analytics. There's no actual requirement to look at source documents in a limited assurance engagement. So I would say the scope is fairly different. A reasonable assurance engagement tends to be a fair amount more work. So these two reports that I had mentioned earlier, the 3530 and the 3531, they would apply. So you could do a audit level 3530, 3531. You could also, which is reasonable assurance, you could also do that same engagement at a limited or review level. So there's almost four different types. You have 3530 reasonable assurance, 3530 limited assurance, 3531 reasonable assurance, 3531 limited assurance. So there's almost four options, two reports, and you have two levels of assurance that's available for each one. So again, for the care and maintenance, you need to be, and you're over 500,000, or if you have an on-site funeral home, you are required to be on the left-hand side here and to have reasonable assurance. Versus the prepaid trust, you have an option of limited assurance as well. Just so you understand what your auditor would go through, their very first step is they need to accept you or to be able to do this work. Of course, if they're already your financial statement auditor, some of that work would already be done. That being said, they would have to accept you for specifically this type of engagement. It then goes on to kind of general planning and general risk assessment. It would then go to typical testing, all the work that I had mentioned earlier. And finally, it would come and conclude with the ultimate report, which is really what you're looking for. That's the ultimate requirement, is your audit opinion or your review report. So that's ultimately what you will pass on to the BAO with your completed forms. So as I mentioned before, I thought it would be helpful to talk about some sample procedures. I'd like to just caveat this with, these are just some procedures that I would do as an auditor, but your own auditor may do something different, right? But I do want to highlight, when you see these procedures, they will have a different feel than your financial statement audit. And I will try to actually compare them as I'm going through as well. So I've taken 5 procedures here, and I've really taken a specific section of the Act, and I've given you an example as, to be honest, what I would do in this case, right? So I've taken this section of the Act, which requires you as part of your care and maintenance trust to have the money invested either in an interest-bearing account, a GIC certificate, deposit receipt. So there's specific requirements of where that money can be invested in Ontario. So if I was the auditor, I'd probably obtain your list of all of your trust accounts and all the investments you have. I would select a sample of those investments and make sure that the investments are complying with the Act, that they are in one of these types of investment, an interest-bearing account, a guaranteed investment certificate. So I'd actually make sure that you are complying with your investments are complying with the specific rules in the Act itself. And I would say that that's very different than a financial statement audit. I'm always with a financial statement audit, there is a requirement to make sure that you are complying with laws and regulations, but that is not the primary focus. So where a financial statement audit, they might just make sure that the amounts agree. It's like, hey, what's in your care and maintenance trust is what I see on your trust statements and your investment statements. Here, the focus is, are you complying with the investment rules? So that distinction very different from an audit testing perspective. So that's one example. Another example here, which I pulled from the Act, is that there's a requirement that within 60 days of the time you do an interment or the scattering, you are required to put that money into the care and maintenance trust. So again, a financial statement auditor may just look at this and be like, hey, are the trust amounts that you have on your financial statements agreeing with your trust statements? But here, if we're making sure that you're complying with the Act, I may actually select some samples and say, okay, you've done this, you had an interment on November 1st. I'll take that example and then say, hey, did you within 60 days put that money within the care and maintenance trust? So it's more looking at the rule, taking a sample of transactions and making sure that you've actually put that money, in this case, within the 60-day rule. Again, that's something that your financial statement auditor likely would not focus on during their audit, but in a compliance audit, that would be a specific stream of work that you would do. So again, that's an example where, again, you would grab the list, you would see an example of an interment that occurred and make sure that that deposit happens within that 60-day mark. Another example here is, if the cemetery is exempt from property tax, they have to make a payment into the care and maintenance trust of that same amount. And that needs to be made by June 1st of the following year. So again, what your auditor may do from a compliance perspective is they may obtain a list of all your properties and a property tax calculation and make sure that that amount was calculated properly and put into trust in the appropriate period of time. I don't have it here, but what your auditor may also do is do a completeness check as well, because they will look at it from both perspectives. One, are you doing the calculations properly, and are you missing property? So let's say if there's something that's not exempt from property tax, they would also look at those examples and make sure that that's appropriately calculated and accounted for as well. So auditors will likely look at it from both directions. Is your current calculations correct? And are you missing anything as well? So usually auditors will go in both directions. Another example would be there's a requirement for income earned in the trust having to be used in the maintenance of your actual property. So is the money that's actually coming out of the trust, is it being used on the right items, right? So again, your auditor in this case may obtain a listing or your trust statements, see that the money going out, and then review the list of expenses and make sure that these are appropriate expenses for this income to be used against, right? And again, from a financial statement audit perspective, your auditor may just look at, hey, is the income correct? Is the expense number correct? They likely would not do that matching and make sure, hey, have the expenses, are those appropriate expenses for the care and maintenance fund to be used against? So again, compliance, it's not about the number being correct, it's about are you complying with the act? The last example here, this is a more, I guess, clear example, is that you need to have a current copy of all your trust agreements per the Act. And so in this case, your auditor may get a listing of all the agreements, select a sample, and make sure that you have an appropriate trust agreement for each example that they're looking at. Again, the key focus is on compliance of the Act, not the financial numbers themselves. So yeah, that kind of concludes the technical part of the presentation. I just want to speak a little bit about MNP, given I'm here as well. So MNP is a full service firm in Canada, and specifically in Ontario. We have a lot of experience in the cemetery and funeral industry. We're trusted by clients across Ontario and communities everywhere. And we are a full service firm. So of course we do this type of compliance work, both those reports that I mentioned before, and we're a full service firm that I at this point kind of does any sort of service that you could think of, right? So we have accounting, tax, internal controls, valuations, etc. So a lot of work that we do here. And the good thing about MNP now that we've really expanded in many areas in Ontario. So we have actually over 2,800 individuals working in Ontario. We have over 46 offices. So I would imagine many of the cemeteries you have an MNP office close by. We have over 780 CPAs. And as I mentioned before, we do this kind of work. And so we, of course, do financial statement audits, but we do a lot of these compliance audits as well. So we're happy to work with anyone who kind of have those needs. So Hamza, that's really it for my presentation. I hope that kind of clarified the report requirements. And at the end of the presentation, happy to answer any questions as well.
Bijan, thank you very much. This was, I believe, a very insightful and extremely helpful presentation. So thank you once again. Now, let's talk about the annual reporting requirements that apply to all cemetery operators holding trust funds. You're required to submit the Form 2, which is the report on care and maintenance, the report on prepaid funds, only if you hold prepaid funds, the financial institution reports or statements, and of course, the audit or review engagement report if you fall into that particular criteria. These filings help ensure that the funds entrusted for perpetual care are properly managed and that the public maintains confidence within the industry. Timely submission is critical. Delays can lead to regulatory consequences, but more importantly, they undermine transparency and trust with consumers. Now, we understand that our licensees often face challenges in reporting, and most of the times it is connected with third parties such as trustees, financial institutions, or even accountant. We've been asked many times on what options exist for cemetery operators who cannot meet their annual reporting requirements. So we understand that sometimes, despite best efforts, operators may face circumstances beyond their control, and they might take additional time in filing. To address that, the BAO has launched a new online application process in October 2025 for filing extensions. This process allows operators to request the registrar's consent for additional time to file their care and maintenance or prepaid fund reports. Now, please, this is important that this is only for financial compliance related reporting. This does not apply to your license renewals. And The extension will only be granted when circumstances are beyond the licensee's control. There is an eligibility criteria which requires that the delay has to be documented, and the documented evidence should show that the circumstances were beyond the control of the cemetery. So, for example, the availability of an auditor or system issues, for example. However, situations like key staff were on vacation, these won't be acceptable as evidence. If reports are not submitted on time, the BAO may issue notices of non-compliance or orders to comply. Continued failure to meet reporting requirements can escalate to administrative actions, including potential suspension or non-renewal of licenses. However, our focus remains supportive, not punitive. We encourage operators to engage with us early if challenges arise. The earlier we are aware, the more options we can explore together to maintain compliance. Thank you for taking the time today to join today's session. We hope that this clarified the expectations and processes around the audit reports and extensions. Please reach out to the BAO financial compliance team if you have any case specific questions or needs to help interpret your obligations. We will now try to answer a few questions we have received during this webinar and through the registration process. We will give preferences to questions received during the registration process. If your question goes unanswered, please write to us and we will be able to help respond to you at the earliest possible. Our email address is on your screen. It is info@thebao.ca. Alternatively, you can use trust@thebao.ca, and one of our staff members will be happy to respond to your questions. I'll move on to the questions that we received through the registration process now. The first question is, can the BAO comprise a list of auditors to use? Now, the best resource to access this information on audit firms in your region is the CPA firms directory. CPA Ontario's website has the directory for all firms within the province. There is a link that we've shared in our notices previously, and you can find it on our website. The list contains over 8,000 active licensed firms in the province. And we're hoping that you can communicate with them, get in touch, and engage them. However, if you do still face challenges, please reach out to us, reach out to the financial compliance team, and we will be happy to assist you. Moving on to the second question, is there any recourse to allow the cost of the mandated audit of the trust funds to be applied to the annual expenses for the cemetery? I understand the question is towards using the care and maintenance income towards conducting the audit. Now, in response, the Funeral Burial Cremation Services Act specifically states the objective of the care and maintenance fund to solely upkeep and preserve the cemetery, which includes groundkeeping, lawn mowing, tree maintenance, landscaping, infrastructure preservations, including monuments, markers, and other physical components of the cemetery. The only expense that can be deducted from the income apart from these maintenance costs is the trustee fee. The trustee fee is essentially the financial institution fee for establishing and maintaining the care and maintenance fund, which is also known as the trustee fee. That's what the legislation allows you to deduct from the income. So, along with other cemetery compliance requirements, audit fees are considered an administrative and operational expense, not directly related to the maintenance or care of the cemetery grounds and structures. The FBCSA also clearly explicitly restricts the use of care and maintenance fund to activities directly related to the preservation, not for administrative functions such as audits, legal fee, or any business related operations unrelated to the maintenance of the cemetery grounds. We have another third question here. Our cemetery funds are less than $500,000 and we have an audit completed. Since we're not required to have an audit, I assume we can continue with our audit and not change to a compliance report. Now, there are two criteria. One is that your accumulated funds within the care and maintenance have to be above 500,000. The second criteria is you would have to have a funeral home, a funeral establishment on your cemetery site, which triggers the requirement to have the compliance audit done. I believe that you do not meet the criteria. Hence, if you've completed an audit, that's something that you've voluntarily done. That is fine. However, if you do meet the criteria, you'll have to move to the compliance audit and provide the BAO on an annual basis a copy of the report. Okay, a couple of questions on if the slides will be shared. Yes, the slides and the recording of this session will be shared a couple of days after the webinar. Okay. So there is a fourth question here. In the past, the BAO inspectors would test care and maintenance and pre-need fund during cemetery inspections. Is this testing being removed from their scope of work since now we have to provide this report? It makes no sense for the cemetery site to go through the work twice. Okay, inspections, you must have experienced, don't happen on a very regular basis. We have 5,300, in fact, more than 5,300 cemeteries across the province, more than 500 funeral establishment, 200 transfer service operators. So cumulatively, we are looking at least 6,000 establishments that our small team of inspectors have to inspect on a cyclical basis. So we might not be able to inspect you on an annual basis, but the requirement of an audit report or review engagement provides a level of assurance to us. And again, it's reasonable, it's limited. The inspectors have a larger scope of work that they conduct during these inspections. They look at your physical aspects, they look at your documentation, they look at of course, the trust fund part as well. So it's not just looking at the trust funds, and hence it's a legislative requirement to have the audit reports, and it is completely separate from what the inspectors at the BAO do. There is a question about the property tax in lieu. I believe this is a completely different topic. I would recommend reaching out to the BAO to inquire what the specifics are, and we'll be able to guide you through it. Next question is, what's a reasonable fee for the audit report? Bijan, I think you've touched base upon this, that the fee varies from organization to organization and firm to firm. So every organization is different. All cemeteries would have, although they look the same, it is a cemetery at the end of the day, but the way they operate differs from each other. The way they keep their documentation differs. Same goes for audit firms as well. They have their own fee structure. So I cannot give you an answer today on what's a reasonable fee. And it all depends on your size, location, etc. There are various elements to it. Okay, I think these are all the questions that we had received. So, Bijan, thank you very much. I believe this was helpful. Again, recordings will be available to all those who had registered. And again, if there's any questions that have gone unanswered, or if there are questions in future, please reach out to us. We're here to support the sector. We're here to ensure compliance, and of course, protect the consumers. Thank you for your time today. Bijan, thank you very much once again. Have a good rest of the afternoon.